We
on
never used the
Capitol
word
Hill.
pause, and I wouldn't use it here
And there's a
today.
man.
What we
Let's
did
check
was
in with
we
here with Mr. Powell
agreed to
today.
maintain the rate at that meeting.
We got Powell talking.
Almost
Yeah.
every single of the 16 of the 18 participants on the FOMC wrote down that they do believe it'll be appropriate to raise rates. It's not as bad as it was 2 years ago. We're gradually getting supply and demand back into alignment, but we're not there yet. We still have a significant excess of demand over supply. So we think housing inflation will be coming down significantly over the course of the rest of this year and next year. There's no perfect way to assess that balance. Obviously, the answer is not zero capital, and it's not 100% capital, so it's somewhere in the middle. We're very focused on the commercial real estate situation. We carried out our duties.
Got a lot to say.
You have to take the capital requirements as they are for purposes of this.
Well,
question.
that's the problem. Our capital requirements are hide the facts that are unpleasant.
Right,
if you don't hide the facts, are we well capitalized?
Traditionally, though, as you know, a rising rate environment has increased the value of the deposit franchise, which more than or at least offsets any portfolio losses.
So we're well capitalized if depositors continue to be lazy and stupid.
The best thing we can do for everybody, including in particular low and moderate income communities, is to maintain price stability and over a long period of time, and on top of that, a very, very strong labor market. Those strong labor market conditions are the single biggest contribution we can make on this area. I think I know the answer, but I don't want to guess. 2% is our goal, and it will remain our goal. It's a medium-term goal, so we're using our tools to get the inflation level back down to 2%.
Powell will haunt me till forever. He just on loop. He's just coming to saying, I don't know. We did our best. We're doing our best. We're doing everything we can do. It's great. We haven't murdered enough people and made enough people poor yet, but we're working on it. We're going to make people poor soon enough. Mark my words, we will get there. So that kind of summarizes a little bit of everything in addition to some other things. Kang, let's give you another shot at the top here. You break it down for us and tell us what you heard.
I appreciate it, brother. I mean, it's just same old shit, different day. Pretty much what I would be looking at here. The only takeaway that I was just kind of looking at was him talking about it's pretty much baked in for 2 more hikes. I think the market was expecting 1 in July. We saw a little bit of weakness on that. And so I think that was the only highlight that I would have taken from it. We had Bostic and Goolsby after the fact, though, talking about that they were still going to remain a little bit more data dependent. So I think that, and the market seemed to like that, and we got a little bit of upside there. So I just think it was the same old stuff. I know I've heard that I'm not there yet, which I heard him repeat over and over and over again, but I've heard that in other settings, but this is a PG-13 show. But anyway, yeah, I mean, just more of the same. Really, that's really what I took away from it.
That was brutal. This is me. I can't do it. It's just not something that I over focus on. I'm not macro focused. And in general, I like to follow where there's money rotation, where we have money flowing, because I think something that's definitely been a true shift this year is that you're not bringing everything along with it. So if we've got a green day, not everything's green. If we have a red day, not everything's red. There can be outperformers. We're seeing that. It's been a name game, continues to be a name game. One of the reasons I love float, but I don't focus on macro. To me, it's noise. So that over and over again was a little bit brutal. Of course, you have to be aware. I mean, you absolutely have to be aware, but I'm not going to over focus on what's been said and expect that the market will react the same way based off of what was said, because it's absolutely, at least for this year, acted completely different.
Yeah, Mel, it's like I think you're taking the right tack there, at least until something changes. It's like I think the policy has not changed as much as we want to pontificate, if you will, on different pieces of the market and how the market should be behaving. Nothing has changed as far as the overall messaging. That 2% objective is still there. They have said over and over again that they're going to keep at it until they get there. No matter what the Fed funds futures wants to price in, how many rate cuts they want to price in, the Fed remains steadfast in their dialogue saying, no, we're not there. And we got that 35 times today. We're not there today. again, with the overall idea that they're going to raise 2 more times. I think some of the things I take a little bit of umbrage with his overall messaging is the messaging is a little bit convoluted when you're saying that, inflation hurts the most vulnerable, right? That's what he's saying. But he's saying that he wants to go ahead and bump up unemployment. He wants to loosen the job market. It's too tight. I don't know necessarily that you can have both and not impact the most vulnerable. I think the most vulnerable do better when they have jobs as opposed to not have jobs. I think that that's something that is kind of important. So instead of actually focusing on what the problem is, like he did there was a question posed on his last little interview as far as inflation. He made the overall comment that they cannot control, basically corporate margins. They can't do anything about that. And so if you have supply chains easing, you have all this, and then in the meantime, you just have corporate margins being chased to squeeze, they can't do anything about that. And so you're relying on corporations to police themselves in a problem that is a little bit bigger than how high can we raise in order to impact.
Yeah, corporate greed is out there, but I mean, I don't know how it is in your area, but I know like everywhere I go, like restaurants are packed out. You got record bookings on like cruise lines. You've got the airports that are backed out. Like the consumer has been super strong, and I just think you've got demand right now that is still outstripping supply, and the consumer is still holding in there. So I can see it from both sides, but at the end of the day, I just think that demand is still pretty strong. The consumer has held in all year long. We've seen it in some of the retail names as well. And I mean, really, the way I look at it is kind of like a scale, right? So they've got a dual mandate. You've got maximum employment with stable prices. And right now, maximum employment is kind of tipping it down here because you still got like a really red hot job market. And we're going to get some more data tomorrow morning with the unemployed initial claims. But the longer that this goes on, I personally still maintain we're still paying a tax in terms of higher prices. And the Fed only has one instrument really, and it's a blunt instrument, and so they're gonna hit it until the until it changes.
Yeah. Mel, you got anything else on that?
Nope.
No. Yeah. Look, it's like, I think it's one of those things that we can look at it and again, sit there and ponder it and look at it. But at the end of the day, the market has already kind of made up its mind a little bit. Whether we're getting rate cuts or not, the market has been red hot on fire to the upside and has absolutely looked at Powell, just to be frank. And if Powell was sitting where you are, Mel, right now, the market thinks you're a punk. The market doesn't believe anything you have to say. The market thinks you're a hoe. That's what the market is telling Powell right now specifically. So it's like now we go back to it and get into the important things. And I think we should kind of push on to where's the money flowing now, because I think it's a very important piece. And Mel touched on it pretty heavily at the top that she likes to avoid macro, that conversation, and stay focused completely on the charts and money. This is going to be, and Mel, look, we really appreciate you being on today because there's been a lot of conversation. It's like, okay, so Fed is saying this is everybody's saying this, corporate earnings were not where they're supposed to be, but yet we continue to pound higher. I still see Home Depot over 300 after guiding down. Cool, neat, all that kind of stuff. But it's like, I think it's very important to get the perspective of somebody like yourself. What are you seeing like up until the past couple of days? What's been a part of this run? Tell us what you got.
I'm going to go with a few ETFs because I think that's kind of something that's underutilized for those that watch Flow. But for me, it's been just a game changer because you get to see where you have rotation from a grouping or a sector perspective. And oftentimes when you have rotation, it's not just one name that's moving, it's actually the whole sector. It's very rare that you see just one outperformer and not have at least a little bit of participation in the group. I'm also somebody who really likes to watch seasonality as well. So being aware of where you kind of have weakness and stronger months is something that's important. Of course, you're going to start from the top and work your way down. So Jen, if you'd like to put up a chart, please. XLK. So we're coming off of a very large OPEX. We had quad witching last week. This is the sticky time. We've seen this. It's the same song and dance. Once you come off of an OPEX, you tend to have this area where you have a lot more volatility and a lot more price swings, and primarily because you've kind of cleared out the book, right? We're talking about all that gamma positioning, delta positioning, everything that's been in the options market. Now we get to see where they want to come back in and position. Sometimes it is some of the same names, sometimes it's different stuff. But XLK was so overheated, and we did have some put activity come in. Was it a lot of size? No, not really, but it was something different that we really hadn't seen before. So they were positioning in 77162 puts. That was really far out of the money. They came to these yesterday. I actually grabbed some of these as a hedge because I am long some names, not very heavy tech, kind of some outliers, but did think it'd be prudent to be able to put on something. So instead of going with puts on the Qs or the SPYs, I kind of thought this would be a good one just because tech has been so hot. Love to see a little bit of a pullback there. But again, it's shorter dated. It's 7-7 positioning. And ahead of this, what we had last week in XLP, consumer staples. Now you had more size here. They were opening the 721. 75 calls. This was out of the money. We're almost 5 points out of the money. These were cheap. These are like 40 cents when they got into them, but they actually did come in with some size. They hit with just under 500,000. Consumer staples, defensive. So you could already start to see where there's a little bit of rotation, possible rotation coming in, and where there's a little urge to get just a little bit defensive. And of course, you've had quite a bit of a lag in consumer staples, starting to see some of those shape up. They've been basing after being beat down. So perhaps that's where we start to see some of that rotation. Top holdings, you can play the ETF. Very liquid for XLP. Top holdings, PG 14%, Pepsi 10%, Coca-Cola 9%, Costco 9%. Or you can play the individual names. One thing that I like to do is be able to see that there's positioning coming into an ETF, because remember, an ETF just doesn't move because it's an ETF. It's going to move because of the basket of stocks that make up that ETF. So kind of have to play that both ways, either following just in your ETF or look for individual names, go to those charts, start checking out the flow and seeing what's coming through there. And perhaps you get a little bit more leverage because some of those names can be pretty good movers as well as pay pretty well with contracts.
Absolutely, Mel. Thank you for walking us through that. So, I know for me, the past couple of sessions have been a little bit interesting. I don't want to say it's cooled down, but we're seeing some defensive positioning, not necessarily defensive names, but we are seeing a little bit more call writing than what we've seen. We are seeing a little bit more put activity. We are seeing some of those way far out of, like Tesla today. I don't know how many millions were peeling off the bid. Some of those further dated leaps that they were just pouring ridiculous money into were coming back on the bid. We saw some of that. It's like, are we at the point when you're watching flow right now and saying, okay, something's a little bit different when you're looking at this massive bull run that we've had over the past couple of months and this incredible push? Are you seeing anything different? Do you feel anything that is like, okay, so this isn't the same?
Yes, different names, definitely, which I love to be able to use flow to identify. And you are right, you're seeing more of that call writing. But it's tricky because do we consolidate through price or do we consolidate through time? And that's been something that's been really frustrating for those that have been just so eager to short NVIDIA. If we've had any consolidation, it's been through time with kind of a basing opposed to through price. And do we continue to see that? I think one difference that I noticed is not as much activity, kind of like what we saw on this ramp up in the SPY, IWM, and Qs. There was a lot of that positioning that was out of the money. That was, a random Tuesday, and you get, over $1 million into something 6 points out of the money. I really haven't seen that as much. Definitely noticing more of the call writing, which I think is important for those that don't know. When you write calls, you're trying to collect that premium. So not only can you trade the options market directionally, writing is actually very advantageous. And sometimes you see that first ahead of where they look to position directionally, because not a lot of people are looking at that. But
yeah, no, it's a lot like when you're picking a bottom, you'll see those puts being written at the bottom, or if you're looking for an exacerbated move to the upside, sometimes you see puts being written constantly here and there. Same concept, just inverse. I know for me, in looking at the flow, it does appear that there's some type of rotation coming back in of some type. We did see the Dow and IWM kind of holding up strong. Tech was weak today. Again, it's like, but it was one of the most interesting things to me, and we'll move off the segment here in a minute. I paid very close attention to some of the weekly and intraday flow. When we were coming off the bottom today specifically, they were nailing the 4380 SPX calls off the bottom. Like with no mercy, they were nailing them. They got their move, they got their play. We had a little bit of a dip, but once we kind of peaked, we kind of double flagged and popped twice like that. There was a lot of weekly call flow that came in hot. I was like, dude, we're flipping green all the way across the board. It hit an EMA, the 377, paused, and then we came down and basically retraced almost the entire upside move coming into close. I have not seen a rug pull on bull flow, weekly bull flow, in months. This is the first time I saw that rug pull take place on a name like NVIDIA, a little bit of Tesla. There was some Microsoft in there that kind of got rug pulled a little bit with the 335s. That was different that I haven't seen in a while. Maybe it's a thing to come, but definitely, kind of keep your eyes open and be aware. Mel, thank you so much for that. Really appreciate you breaking those things down. All right. It's everybody's favorite time. We decide where we want to shag, marry, or kill. What you got there, Kang?
Hey, I just say really quickly, it's hard to short a mania, right? And the other thing I would just say is don't get too, on one side of the boat because, and I've been trading for 19 years now, and I will tell you that at some point macro does matter. So the market can move around in the short term, and but macro will matter. We've had an inverted yield curve for a long time. You've got fear and greed right now that's stacked up in. So I'm just urging some caution, right? Macro does matter. For me, I would say what I'm looking at this week, Tesla. So when I submitted this earlier today, Tesla had a nice 4-hour trend that had been moving up along since the 26th of last month. Nice, well-defined trend right here. And as you can see today, what we've done is we've just come right back down and we've tested this trend. 262 is the magic number there. And actually, we're lower than that now in after hours. So I'm going to be watching this one to see if we can get volume either on a bounce or on a break. And I will be looking to shag this one again with something longer dated, given that it's on the 4-hour chart. So right now, kind of in limbo. I don't have a recommendation for either way, but I just wanted to highlight that trend right now. Tesla, I know we've had a lot of Momo behind it, but definitely is getting to the point where I want to shag. It's at a technical fork in the road.
Yeah, it's hard to argue with that. I wouldn't mind a pullback in Tesla, a little bit more than what it's giving. I'd like to really, really load up. It's like that move, that move over 330 was kind of expected, but the move up to what was I'm not 382. 230 was expected in a lot of ways. The secondary move I was not anticipating, so I was not nearly as loaded as I wanted to be. Even though flow was screaming at me in the face, people were selling their children to buy calls on Tesla on that run. So this pullback, I don't know if this is the one that I want to scoop in and kind of load up on, but I am definitely looking to go ahead and seize the day on that thing. All right, Miss Stone, what you got going on over there?
I'm putting a ring on it. I'm going to marry it. STNE, Stone Co. This is a Brazil name and not one that sees a lot of activity. Yesterday, we had a PayPal upgrade, and you started to see some names in that space really start to take moves. So when we're looking at rotation, I think this is definitely a space where we have some potential. We haven't seen options flow here, but what we have seen is some larger dark pool activity, which is unusual for this name. This started last week, kind of put it on my radar. I have to be honest, I haven't looked at this name. And it wasn't until I saw the dark pool print come in and going, hey, we don't see this very often. We had 3.1 million shares on 614. That's 60% of 30-day average volume. So think about that. That's very substantial, very large size for this name. When you look at that chart, it looks really good. You've got a chart that's just been basing for a year, over a year. So you're building up energy there. Do I know if that dark pool was a buy or a sell? I don't. And there's not anything that's going to tell me that because that's the intent of trading on a dark pool exchange. For those that don't know, a dark pool exchange is a private exchange. And usually that's where you have those larger orders facilitated. But the intent is to be able to not disrupt the current market auction and still be able to facilitate those trades. Those can be buys or sells. Now, what I like to do is go look at that chart. What does that look like? think like an institution. Does that look like a good spot where they would buy? Kinda. It's right there on the 8 and 21 EMA, just broke out, came back and did a retest. This could be where you'd see some interest. And you've also had some of the other space. A lot of the Brazil names have been seeing some attention. So I can kind of take and piece all that stuff together and kind of formulate a thesis. Now, because we don't have options flow to go along with that, it seems like I was able to get a little bit of an early entry, but I'm giving myself some time. I want to be able to let this trade work. I'm out to January in the 17 calls. So I've got a position with a little bit more time. And then I kind of layered that. And I also got some shorter dated 7/21/15 calls, because that way I could use that to take profit and still really let that longer term position, because I think we've got a lot of potential here. And the Don himself, Mr. Warren Buffett, 3.4% stake in this one. He's been active in this name, which is kind of unusual for his normal MO and what he normally goes into. So you kind of have to wonder like what he's thinking about here. This is a financial technology company, again, based in Brazil, but I'm marrying it.
Look, Mel, honestly, I looked it up when you were going through and kind of read through a couple of things. It's a very, very interesting company, and emerging markets have been something that, potentially could get that really nice move. It is up a ton over the last year. I think it's up, what, 70% on the year, something like that. So it's had a good run coming off the bottom. But I will also say this, you have been absolutely on fire, like on freaking fire with the trades that you've put out over the last several months. Like it's not even close. It's like Mel Stone and everybody else as far as, these trades that you're putting out there that have been exceptional. I would be a fool to bet against you first thing in the morning. I may, in fact, jump into STNE with you 100%.
They're still really cheap. And also keep in mind, this is a name that's a little, thank you for that as well, Hells. I definitely do appreciate that. This is a name that you don't see a lot of options flow. So kind of my thought process was, if I wait for flow to come in, it's going to juice those contracts, and that can kind of hit and ripple effect across the chain. So I'm getting time to, hopefully we'll see some flow come in, and then it'll automatically kind of juice those contracts in if we can get that momentum and price discovery to the upside. But definitely liking this one. And that's one of the reasons I love to be able to look at dark pool. It's not just one thing. We've got the advantage of being able to see where any of the players are positioning, whether that be your common shares off of a dark pool exchange or your options flow. So I feel like I've got the best of both worlds, and I could just see as much as possible as far as where larger money is going to be put to work. And that's important to me, because I prefer to kind of follow and see rotation, find some early
No,
interest on some stuff.
no,
It
no
allows
offense,
for
I
that.
think we got a 20-minute show.
Okay. So, well, thank you for that, Mel. Let me jump into to what my little dealie is. I'm still doing the same thing over here. I'm long SoFi, which has been very, very, very nice to me. Long Intel, again, very nice to me. And then I opened up Bank of America, which has been a pain in my ass. But I did see some strong puts coming on the bid at the end of day today. Some pretty heavy money, over 10 million in bid side puts. So maybe there's something there as far as it moving forward. As far as Bank of America, I'm going to continue. So what I'm going to do is stay in those positions, but I am looking to scoop Tesla long first opportunity that I think it gives it to me. And I think it's going to give it to me here pretty quickly as far as that V-shaped reversal and just absolutely throttle back to the upside. So I'll be watching Tesla very, very closely. All right, let's see. What do we have last? Oh, we have a viewer question. Sarah Hubbs. Everybody loves Sarah. Sarah posts cool stuff. Sarah's a smart person. Sarah wants to know, Kang, and you tell me, because I struggle with this, how do you deal with your trading emotions, Kang?
Well, I would say it's one thing that the machines have over us. Like, they have no emotions, and we do. Don't believe anybody that tells you that you're never going to have them, because it's just a matter of trying to manage them. So I would just say, short and sweet for me. When I'm feeling a certain way, it's knowing that I'm feeling that way. And the way that I've tried to do that is limit risk. So, like, if I feel like I want to be in something like FOMO or anything like that, knowing that I generally lose if I chase, and then I'm going to size down. You know, same thing with like any of the other emotions. I mean, we're always going to deal with it, but I think that over time you just learn to you learn more about yourself in terms of how you're feeling, and then how you adapt to that.
All right, that's a good answer. Mel, what you got over there? How do you do?
Yeah, I agree with that. I think knowing yourself is such a huge part of this game, and being able to have that discipline to kind of, just like Kang said, like know when that's kind of creeping in, know how you usually respond, because you can only touch a hot stove so many times. I mean, at some point you have to be able to make a decision that you're not going to touch that stove again. For me, I think one thing that I realized early on with FOMO, as far as like that one thing that's moving, it's just not really something that I get too wrapped up in, because I quickly realized that as I'm just over complicating that and overlooking at that, and like just maybe I missed out, maybe I've chased, maybe I've just gotten burned myself. I'm missing out on all the other opportunities that could be coming in that I could actually take. And so I just kind of try to, there's going to be those times you miss that stuff, just be okay with it. But I think that just takes some time. But knowing yourself and recognizing that is really important, because some people, I think, don't even take that into account, that they're doing the same pattern and the same thing over and over and over again.
Yeah, great point. Great point. It's like, look, it's like, I'm not gonna lie, y'all. I'm an emotional cat. It's like I'm a very, very intense individual.
Oh, we know that.
Man is correct. I tend to
I'm
throw
just
things.
messing with
I get pretty heated. I'm look, the way I look at it, it's a part of who I am. And that emotion that you have you can also use it to your advantage if you can learn to harness it. That's one of those things. It's like Tesla for me was the ultimate buy and harness for me, that basically gave me a lot of financial freedom, and it was based purely on emotion and thinking about what the future would be. Had I just gone with the flow and been like, screw it, maybe I wouldn't be in the position that I am now financially. But if you can go ahead and use that and harness that energy, that emotion, you're going to be that much more ahead of the game. Don't fight it. Learn to recognize it and harness it and use it to your advantage. That's one thing that I can say for sure. Now, if you're overheated, there's plenty of times during the day, and the folks in the Roadhouse will say it, I'll be like, I'm about to do something really, really stupid, so I'm walking away, because I know that feeling. I know that emotion when you're getting close to full tilt. You're like, well, screw it. Let's just load in, full margin on a 0 day and see what happens. See, that's bad. So you have to remove yourself from the situation and then come back in a few minutes. It is ridiculous to think that anybody can be void of emotion. To be honest with you, I don't want to be void of emotion. I like me. I like having emotion. I like being passionate. But learning to control it, learning to harness it, having the discipline to recognize it will put you that much further ahead of the game. Sarah, thank you for the question. Really appreciate it. All right, so we must give a special shout out to Kaya. Kaya, may catnip rain down upon you for eternity. May you feast upon fresh tuna for eternity. You are in all of our hearts. You're in all of our prayers. Until we see you again, Kaya.
Sending love out your way, Maria, and
Definitely.
condolences there. But yeah, folks, this wraps up another edition. Thank you for hanging in there with us. We know we had some technical difficulties there at the beginning, but glad you guys hung out with us. Thank you so much, Mel, for joining us this week. We're so glad to have you, and dropping that dark pool knowledge on us. And all right, folks, that brings us to the end of our show. We hope that y'all learned and earned. Please make sure to click that like and subscribe there on the YouTube page. That way you'll get notified for future shows. And until next week, everybody, stay green. Peace.